of the last 20 loans that I've done, there may have only been 2 where the buyer didn't ask the seller for some help. Let's talk about that. What's that mean? So, for example, with an FHA loan, the buyer has to have a 3.5% down payment. And the cost for buying the house, which would include the appraisal, the escrow agent that's going to do the closing, the title company, credit report, and usually there's an origination fee. That's going to land, depending on the price of the house, around 3 to 4%. So now, potentially, an FHA buyer could have to come up with somewhere in the area of 7 to 8% of the purchase price. On a $200,000 home, that's $16,000. And back to the last 20 transactions, and I'm just kind of taking this off the top of my head. I haven't done the statistics on it, but it's going to be pretty close. Maybe 2 of those clients didn't need help from the sellers. The other 18 did. So let's talk about how that works.
Well, there's a couple of ways you can address that. First of all, if the buyer expects to get some kind of concessions from the seller, there's a combination of, you have to make the right offer price in combination with the amount you want for closing costs help, correct?
Correct.
So one way to get around that, if the price is at market value, if the house will appraise for a small amount higher, then you can build the cost of those closing amounts into the purchase price of the house. So that way the client is still going to be getting their closing costs, so they don't have money out of pocket at the closing table. They get the house they want, and their payment goes up, maybe $15, $20 a month, depending upon the amount of closing costs back in there. The other situation is just negotiating with the seller to where they're comfortable with a final offer price, and then whatever the net would be after closing costs. So there's just negotiation and construction of the offer to make it work.
Right. And one of the important things about sending your buyers to a lender, whether it's me or whatever lender that they've chosen, and to doing that early enough in the process, is that when you get ready to write that offer for them, you've got the approval letter, but you also know what purchase price is their ceiling. They know what their payments are going to be on various purchase prices. They know whether or not they're approved. They know what kind of conditions they need to meet, and they also know what kind of help they're going to need from the seller.
Exactly.
So that when you go to write that offer, I've had situations where realtors wrote the offer and then came to me and said, now how much help does the buyer need from the seller? By then it might be too late, because once the offer's been written and signed around by all parties, it's very difficult to go back later and add to the price that the seller's already agreed to accept.
That could be, they could go over their threshold of where they're pre-approved.
Yeah,
so what's important is knowing what threshold to look in, so that they don't extend themselves beyond where they can comfortably with their loan officer, or where they feel comfortably on their own. So sometimes you have to back down. We can't look at a home that's 190, we have to look at a home that's more like 170, 175.